Let's get in touch with Dilip Banthiya, the CFO at Radico Khaitan. Hi Dilip, thank you so much for joining us. Very good afternoon. First up, let's talk about financials. So it's been a very good quarter, revenue up about 34%, profit has seen a 73% jump in fact. So take us through the key drivers behind this kind of outperformance.
So thanks for having me on your channel. And this quarter has been stellar quarter from all-round performance in the volume growth. It has been the highest ever P&A growth. It has been the highest ever EBITDA. We grew our P&A by 22%, and regular mass category by around 80%. The overall volume growth was around 38%, vis-a-vis last year same quarter. So we have been growing our brands across all territories, all regions, and this is the P&A, which is our focus area, has been growing, and this quarter also it grew by 22%. There, Royal Ranthambore, the brand which is at the Scotch entry point level and more than that price, is grew by around 67%. Another brand which is the After Dark Deluxe Whiskey, which we achieved a volume of around 1.9 million cases last year. In the first half itself, it again grew by 100%, and we had a volume of 1.5 million cases. So the Magic Moment family, again, we have grown by 20%. So the growth is across the categories and across the regions.
Dilip, talking about the margins, now they did see an improvement to around 16%. Which segment or cost lever contributed the most, and how sustainable is this level going ahead? Any margin guidance you'd like to share with us?
Yeah, so actually we were last year at 13.8% as EBITDA margin, and we guided that we will improve our margin by 150 basis points this year and for 125 basis points CAGR for next 2 years. So this year our margin in the first half has been around 15.5%. So we will continue to maintain our guidance of 150 basis point EBITDA margin in this year. And main reason is that premiumization is happening. At the same time, there is a tailwind of the softer raw material, which will further be reflected in H2 of this year.
Understood. So Dilip, that's about the margins, but prestige and above volumes, they also grew about 22% to that 3.89 million level cases in which is your highest ever actually. So how do you plan to maintain this kind of premium momentum?
Yeah, so our P&A category is very, very robust. Our luxury and semi-luxury brand, which last year we did a total turnover of around 350 crores. This year we have guided that we will continue to drive the growth in the luxury, semi-luxury and cross 500 crores. There are various strong brands in these category. Rampur Indian Single Malt, which is growing very well in this year. Again, Sangam World Malt, which has been rolled out in India in 7-8 states, that is also doing well and growing in strong double digit. Another brand, Royal Ranthambore, as I said, grew by more than 70%. Then two of the brands in the P&A category we have introduced very recently. One is the super premium whiskey, Morphis super premium whiskey, which we've rolled out 2 months back and is being distributed in 3 states. We plan to take it to 8 to 9 states by the FY26 year end. And another brand, which is the Spirit of Kashmir, which we launched again 2 months back. It is now available in 7 states, and we plan to take it to almost 75-80% of the market by the close of the financial year. So our P&A category growth with the luxury Magic Moment itself is growing by 20%. We continue to drive the growth across the category. After Dark Deluxe Whiskey is growing more than 100%. So we are confident to deliver more than 20% growth in our P&A category.
Okay, we agree to that. Having said so, for the growth of any business, Dilip, the input cost matters a lot. Talking about the same, the raw material prices are expected to stay benign in FY26. Now, how will you translate that into the margin gains?
So actually, there has been the raw material impact is yet to reflect. Some part has been reflected in Q2 of this year, but the real benefit will come from the Q3 onward when the season start. So we are confident that this will further entail to the expansion of the EBITDA margin.
All right, so that's about, the raw material cost. But Dilip, also tell us, how was your market share in Andhra Pradesh? How has that evolved post the state's excise and reform and, and the route to market change? How has that impacted your business?
So we actually have been doing very well on all front. Like Uttar Pradesh, we have a market share of around 27% of the total IMFL industry. In Andhra Pradesh, we have over 30% market share, which last year was around 10%. And Rajasthan, we are growing. Uttarakhand, we are growing. Madhya Pradesh is a good growth market. So we continue to drive our growth across the categories and across the markets. And we are confident with the bouquet of brands which has been launched, and they are strong brands portfolio with Magic, Morphis, Royal Ranthambore and all that. We will continue to deliver the growth in our P&A category, and regular is also under growth, and growth momentum at this point of time is continuing, and we are seeing that in coming quarter and year as well.
Okay, and Dilip, one last question. The board approved the amalgamation of subsidiary and step-down entities. What cost, compliance or efficiency benefits do you expect from the same?
So this merger is as a result of the actually Sitapur plant. We have established a greenfield project, and the land, the regulations in the state allows certain quantum of the land to be taken in one company. So there are various companies being floated, and those companies are now being merged with the Radico Khaitan. So it is not related to the efficiency being released out of this merger. It is just a process.
Okay. Dilip, thank you for that take and giving us the view of your forward-looking plans, and best wishes to you and Team Radico Khaitan for the quarters ahead.